Good afternoon, and today is January 16, 2024, and it's a Tuesday. It's the first training day of this week. Monday we have a day off. I think it's MLK Day, so the market's closed. Okay, first we look at the economic calendar. See what's going on this week. Right, we have a Monday off. And Tuesday, today we don't have any really, high impact news. But tomorrow we have a little bit news right here related to the retail sales. And then we have a little bit related to mortgage application. And on Thursday we have a shop. The housing's related data and also the job unemployment data right there. So this week it not much going on. And believe it or not, we are in the third week of this month of the year 2024, and next week gonna be huge because next week gonna be a big tech earning, right? We know big tech earning coming on the week 4 of January, which is its report the last quarter of the year 2023. So it's gonna have a huge impact, but I think the market already set up in a sell mode. If you look at the charts, you can see that. But you never know, right? You have 50% of that. But based on risk-reward ratio, we can take the trade on the short side. And also this week we have Friday, which is the OPEC. Right, it is not operation, but option expiration for the quarter. So they call triple switches. I think triple witches, which is triple stand for quarter. Every month you have a option expiration on the third Friday of the month, but then every quarter or every 3 months you have a triple of that. So which is the option expire for the week, for the month, and then for the quarter. That's the reason why they call triple witches. Yep. Let's see what does mean triple witches. I think triple witches. Yep, triple witches day. So triple witches when the expiration of stock option, stock index fall on the same day, right? You have the future 4 times a year, which is the third Friday of March, June. Wow, they don't count January? Wow, 4 times. So, okay, they don't count January then. So if you hold a stock option or stock index option, about either call you listen to what you do. Stay of the morning as if you option in the morning you like CSI. Future. Oh, okay. So basically, right here indicate the red right there. So I don't know why January not count. Okay, we thought that January gonna be a triple witches. But anyway, that's special about this Friday. All right, now go back to the chart. As you can see, today we do a little bit different than previous episode. We change the background color a little bit. We used to be the dark background, but now we change to the light background. The reason that's because we want to keep, simplicity, right? You start with background and then you can pan the picture much easier. So that's an idea. We want to try something new this year. Okay, let's look at the big picture, look at the 4-hour time frame. By the way, we add a little bit dot right here. And the indicator we use is called better parabolic, SAR. Basically a signal to tell you to switch from short to long right there. Yeah. So how about to determine the reverse or the state that you're gonna make the move? So in this case, short. This is switch long. Then we can put a buy order on top of this. So that's an idea. Okay, the reason why we see the markets in a short side, because you see that the last 3 days is it down close, and for today especially it is open below this guy, below the critical turning right here, right? You look at this candle, it's on December 20, right? It's a big sell-off. Then it's go up here. It build what? It build a sell-side liquidity, right? It tries to trap all the sell-side liquidity, and then boom, it go down. It drop that sell-side liquidity. It take out the low of this one. It take out sell-side liquidity, and lots of people are gonna trap in here. They're gonna short right here, right? Based on the signal, the short, right? Short. They can short them, but you know what? It's a failed breakout. And then what is gonna happen? It's gonna take out this high, which is a buy side liquidity, and it start to fall again. So this is one of the key level we're watching right now. So let's see. If tomorrow it also stop below this and then it open high a little bit, we're gonna short them, right? Because it already take the sell side, got the buy side, so the property is gonna go down. At least it's gonna go down to take, revisit this one or this one again. So we have the gap right here. It take care of this gap. What we feel like right here is not, right now look like not break out this resistance level right here. So the next level guys, it can come down this level. So let's see. That's our projection. Anticipation right there. We could be wrong, right? Let be open. We don't want to manage any position, right? We have to stay nimble and flexibility. We have to give up the right to be, not the right, but the need to be right, the need to be controlled. We're not control the market. We just take the trade when we see the risk reward, in our favor. That's it. If we're wrong very fast, and we cut our stop loss right there. But if we right, then we make more money when we lost. So basically, we try to build a positive, expectancies. We don't need to be right. We only need to be right, less than 50%. But if when we right, we make more money than we lost, then we're good. So there's no need for it to be right. And we don't have to be fear about lose, because that's part of the game. That's part of the statistics game we play right here, right? No one knows for sure. I mean, no one knows for sure which market's direction market gonna take. But our job is to identify the low risk where the market gonna make a move, make a trend, and we catch the trends right there. And if we're wrong, then we wrong very fast, and we wrong very little. The cost for the wrong should be small. So that's our anticipate right there. We see a little bit of gap right here. It fill the gap, right? You see the gap. I mean, when you look at the 4-hour time frame, you see a little bit more. Yeah, it fill that gap with this down move right here. But we have another gap right here. Not much. Fill the gap and bow back, take the buy side, and now it's open and close below that. So let's see how it play out. This is the daily time frame right there. But now look at the 4-hour time frame. 4-hour time frame give a little bit more detail. You see the gap right there on 1 hour, but in the 4-hour it's gonna be this gap. So it fill this gap, with this low, See that? It's a 4 breakout right there. People talking about breakout, but it did not. So you see how we're gonna play? It's beautiful right here. It's a beautiful trade. We don't have to do much. You see, I think we learn a lot. Our eyes, when we calm ourselves down, we can see things we couldn't see before. So 467.36. You see that? We just do the breakout trade. Fail breakout trade. That's it. If it not fail, then we can reverse and jump on the breakout trade. That's it. That the trick right there. I think 36 or 37. Sorry, 36, not 34. You see that level? Very important right there. So we have this level to watch, right? The high of this candle, 82. Oh, because this one, we look at the 1 hour time frame. So that's why I come up with the, let's look at the 1 hour time frame. Yeah, I think let's fix this one for now. 82, not 79. 82. And yep, I think let me make it orange also. Okay, so this is the level we watched. So we see when we add that indicator, it gives us something interesting to look. Because you see at that moment, it switched, right? The PSAR, they call PSAR, right? It switched, you see that? It switched to short, but don't short right away. That's tricky. Because at minute we short, it just trap it right there. You wait until it take the sell side liquidity, excuse me, buy side liquidity. When it switch, then you can short them. You see right here, it go up, it keep going up, it take the buy side, then you can put in a sell stop, and when it get down, it will execute it right there. It will fill our trade right there, right? And then that when we put the that's when we put our stop loss at the high right there. So we reach $1.75, and we know that it's gonna take this buy side because that's how we're gonna do. That's how price action gonna do our liquidity. So you have almost 1 to 7 risk reward ratio right there. $8.32, $1.75. So almost 1 to 4, right? Is that 1 to 4 or 1 to 5? Let's get the calculator out. It's basically $8. $32 divided by $1.75. Yeah, 1 to 4 ratio, almost 1 to 5. That's good risk reward ratio right there. So that's how we execute the trade. Very, very low risk trade right there, right? And we have to patient wait. You know, don't go in early. As soon as we saw this signal, short them. Don't short right here, right here. Wait for the buy side we will take. You can see this pattern everywhere. The same right here, right? When it switch to long, then don't go long in this candle. Wait until it go below this. In this case, it may not take out the sell side because it's huge rejection right there, right? So it's not gonna take a sell side. Then we can do what? We can put in right here. I buy order right here. When it go above that, it's gonna be buy order. Because we know that the target is complete. It take the buy side, the sell side, so we can go long. Right? That's and what is the risk we have? I think that's the same idea. I think we reach the same. You know, we can trade all week like this, all day. Take this kind of trade. So the risk is going to be the same. Almost the same, you see that there? Go in and reach right there. don't go right away, wait, and then when it come back, put a buy stop right there. It will come back to this, candle, or you can put the buy stop right here. We have two options right there, and we're gonna know that it's gonna check this buy sell liquidity, which is the high of this one. So this one will have a better risk reward, $10.91, $1.75. So it's 1 to 9 risk to reward ratio right there. So now we see that it's short rate. This where the shortcoming, where you don't short right away. Right, you don't chase it. Wait until you take this buy side and short them. When you see the rejection right there, a lot of rejection, then we short them. So the same logic right here, but we don't apply the same logic. Wait for it to take this, make a lower low, take the sell side, because we see the huge rejection, and also the target already did a hit, right? The algo want to take this buy side, it already hit that target, right? You take one and you take one more time, take out the targets, then we can engage in long right here. And also we see the huge gap right here, so we're not gonna go long if this gap not filling. So let's see. Yeah, that will be our target right there if we're gonna short them tomorrow. Let's see, we're gonna short them tomorrow right here. We somehow, if it open below this level and it go up right here, we're gonna short them. Then it gonna go to refill this gap. Okay, I think that's good enough for the 4 hour. Now let's look the 5 minutes time frame and what do we see today. So okay, just look at the trade, right? Here's the gap down. Okay, in order to see this, you in Thinkorswim, you have option whether you show extended, or let's say you show extended. Basically, you show the pre-market, right? I think let me change this color to like that. Is the color much better, easy to see. Yes. Yep. Let's save it. So you see it's open. Yes, you see the gap right here, right? This is the pre-market from Monday, 6 p.m. Eastern until 9:30. That's the whole re-market right there. But if we don't want to show that, then we just uncheck that, so it's not gonna show the pre-market. Okay, let's delete this from 4 hour time frame. So basically we see the gap bigger, right? Because we don't show the pre-markets. So in this case, we see that the gap down. And
and you see what happened, the gap down, and then it go up to fill up the gap. You see, exactly fill it up and create a double top pattern, and then it show up right there. So it's a beautiful trade right here if we can catch it. So one of the trick is that we're gonna put a sell order, right? We're gonna go here, or we can put the sell limit right here and a stop loss right there. Whenever I hit this level, we get out our order fill. So how much we reach right here? So we're gonna reach 37 cents, and our target gonna be what? We're gonna take this sell side liquidity right there. That's low right there, and it did. Let's say this level. Yeah, it hit this level at 1410. And we got $3, almost 1 to 9 reachable ratio right there. And that's a beautiful trade. So when we receive the signal, we see right here, short them, right? You see the same idea on a 4-hour time frame, right? We receive a huge down close candle and the signal switch to short, right? But don't short right away. Wait until it take this, buy side clear of this candle. We put a buy stop, a sell stop right here. If we don't use the gap, right? But we know the gap go and gonna be go down. Then we use this candle, very reliable. The candle when it switch from long to short, then wait, don't engage short, because we know the market gonna be liquidity, sell side liquidity right here. All the sell side in order to going down. That's the reason why. So we put a sell stop right here. Yeah, the high of the candle is 436, 476.39. You see the level right there? This candle. Boom. So now that's how we trade. We have to be calm down and see how liquidity will build up and what the signal come from right here. This is the signal. To short them, right? Because it's already filled this gap, right? The gap down tell you that the market gonna sell, but it needs to refill the gap first, and then it gives you the signal after the fill that it's gonna go down. Then based on this candle anchor or signal candle, what do you call that? Anchor candle or signal candle, you're gonna put your sell stop right here. You see, go up, it will get out of fill. We're either going right here or right here or right here. That's it. Yeah. So we either going right here or we're going right here. I mean, if we go in right here, then we reach a little bit more, 10 cents more, but we still have a huge reward. A very huge reward. See that? Let's put on the right. You can see that. Let's put on the right. Yes, so we have, almost 1 to 6 ratio right there. See this candle right there? So basically, a fall breakout, this setup you can call as fall breakout and give you a signal. Okay, let's take a screenshot and we close this episode for today. It can be for breakout. And first we have a gap down. And what is this? Give a second. And we see the condition is that the gap fill, right? And then we mark and then we have a signal candle at 11, which is this candle right there, right? The signal right there, short. But then we do a sell stop at the high of that signal candle, 476.39. And I think we can entry at this candle, right, which is 11:30. So we entry 30 minutes after the candle signal, and then we exit time at at 14:10, right? 14:10, yeah, 14:10, right? 14:10 when it hit the buy sell clear right here. Sell side luckily at at 9:50. Very interesting. This candle is 9:50 or 9:50 right there. That is our target. Let's move a little bit here so we have more time. More real estate, more space. What else we want to say? I think that's this. Beautiful setup right there. To be patient. We need a gap down and we wait for a gap fill. Wait for the candle signal. Right, market structure shift right there. And wait for a double top. When it takes the buy sell clear of the signal candle right there. And then we can engage. Yep. So that's right here. It's the candle signal right there. And here is our target. Okay. And we enter about 11:30 right here. This candle right there. Yeah. And our stop loss is right here. Around this gap down right here. Oh yeah. One more thing I put right here is the risk reward ratio. So basically for cent to $0.04, so we go with the lower end, right, which is 1-to-6 risk reward ratio. So right there, very good trade. So we entry at 11:30 and we exit at 14. Okay, let's save it. And what's today? So this week will be 20/24/01 and 16/2/19. Open, and we have Tuesday. And it's a fail breakout, so set up. $11.30. Right, that's our 11:30 end time right there. All right, I think that's it for today. We go over about 7 minutes, but anyway, appreciate your time and interest, and we're grateful. Be grateful. Practice grateful and forgiveness every day in order to stay in so-called zero state so we can trade better. Thank you and have a good evening. Bye for now.